What's up, traders? This is Vee Trades, and today I will be doing a technical analysis breakdown for Tesla with the ticker symbol TSLA. I will first go over what I see on the daily chart and finish the video off with the weekly chart. So here we have the daily chart for Tesla, and let's go over what happened last week. So it looks like prices closed price closed on Friday at the 193.17 level, but when I did my analysis was this Friday right over here, or actually this Monday right over here at the 188.79 level. So since then prices went down a little and then basically went up. So let's go over where it's most likely headed next. So there was this downtrend channel, and I said that we could probably stop out shorts because they're going to be entering at this channel resistance. And you can see there was a little rejection, and then the next day later you can see that prices kind of rallied higher and it started coming back for the stop losses. So the shorts got stopped out, and you can see that this was practically the largest green candle in this entire uptrend from April 27th. This was the largest green candle. It was even bigger, but sellers managed to bring it down back inside of this channel. And the reason it was that big was because shorts took a short position and they got stopped out. They put their entry right there, they put the stop loss above the candle, and they're probably targeting the lows of the channel. So they practically got stopped out, and that's where that big move occurred. So this was not a good place to enter short because of the context going on the chart. So let's go over the context because anybody can just draw lines and arrows on the chart, but we have to understand what price is doing. So there was this previous downtrend in play, so this is important to keep an eye on. The channel doesn't really fit the greatest against the price, but you can still see there was this move down. Then prices made a move up. So price made a move up right over here, this orange channel. And it came back to a very key level, which is this 210, 207 level. It's been acting as a magnet for a while now. So basically, once you understand, basic price action rules, then this becomes much easier. So like I said before, you just need to practically just draw lines on the chart and understand what price normally does. So after a break of a channel, you expect two attempts at the previous extreme. So with this downtrend, we saw the break of the channel. This was the first attempt to go back down to this previous low. This was the second attempt. So the second attempt failed because prices started reversing up. And also at the same time, when price broke this uptrend channel, it's going to make two attempts at retesting this previous high. So this is the first attempt, and this is the second attempt. So the second attempt is still in play of reaching this high. So that's why the shorts did not, it'd been smarter not to go short right into the second attempt at this making a new high for the uptrend. So that's why we saw prices, stop those shorts out and continue to move up higher. So what can happen now? Well, why did this, two legs down fail? Why did the second attempt fail right here? Because the push off of this level right here was kind of small. It was this size right here. Prices came back up to that level and it pushed off again the same amount. And after that, after these two legs down, prices could not go any lower. So this looks more like a correction for another leg up higher. So this was one impulse. Second impulse is targeting the 267 level. So we'll see if that can be reached. But as right now, prices are still working higher. Until I see, massive rejection, I'm going to be looking for higher price targets. I think there's a good chance that coming back up to this 208, 207 level, because it's been acting as a magnet in the past. And the second attempt still looks like it's in play. It looks like prices want to continue to push, go up higher. So until I see maybe something like this, a huge drop down and a couple attempts that go up that fails, then I'll be looking for lower price targets. But right now, it's looking kind of bullish. This channel may not hold, and we could be seeing higher price targets. So that's all I see on the daily chart. Basically, it was more likely prices were going to go higher than lower. That's exactly what occurred. It stopped out the shorts with a massive green bar, and they used their stops as fuel to the fire. So how do you get out of a short position? You get a long position. So the longs, the stops got triggered, and that's what led to this huge, spike up. So we'll see if this continues, but as right now, it's still looking kind of bullish, and we might even see, possibly the 260s in the future. So right now, let's just focus on seeing the 207, 208 level hit first, and then we can look for those higher price targets. But as right now, it looks very likely we're going to be seeing higher price targets. but also we can't deny that, you know, we're still inside this downtrend channel and price could, you know, continue to trend down lower. But as right now, I don't think this pattern will win out. I think it's going to be the bullish one because it's kind of weak, and you know, I think the price is going to go higher. We already saw 2 attempts down for this downtrend fail, so it's not really likely that we're going to probably see, you know, continuation towards the downside. So that's everything I have on the weekly chart. Excuse me, the daily chart. Let's go and wrap this up on the weekly chart. So here we have the weekly chart for Tesla. I'm going to draw this channel on here. Prices were moving nicely in this channel, then all of a sudden it made a breakout on the bottom side, which leads to a breakout on the top side. So it looks like prices are about to do it. We're very close to the resistance side of the channel, and we're probably going to see a breakout fairly shortly. This was a very strong level in the past at this $200 level. We just hit it actually on Friday. We came very close to it. So this still looks pretty bullish. You can see that we have, you know, nice momentum towards the upside for the past several weeks. So it looks like it wants to break out on the top side. So once you understand, you know, basic price action rules, like, oh, okay, breakout on the bottom side of the channel leads to a breakout on the top side of the channel. So it looks like, you know, that's what prices is trying to do. Since we had one massive leg up and 2 legs down, we can see another massive leg up, and this is targeting, like I said before, the mid 260s, and that's where a little gap is that can be filled. So we'll see if prices can first break outside of this channel, meet the measure move, and potentially fill in the gap. So it's looking kind of bullish. If we see this type of rejection from the channel, this big red candle, then obviously, you know, this measure move and the gap fills off the table, because now the channel is coming back into play. Because you can see there was this green candle that drove right into the channel resistance, and the next couple of weeks later you can see there was massive selling that occurred. So we have not seen that yet. Can it occur? I mean, the context is a little different. There's a good chance we probably see the breakout occur instead of seeing that rejection. But again, nothing's guaranteed. The channel could still come back into play and we could see aggressive selling occur, but it's more likely we don't see that and we see higher price targets. Again, none of these are trading signals. You don't want to be trading just based off of where you think price is heading. You know, that's how you're going to lose, you know, most of the time. You wait for a reaction or some type of setup to enter in that direction. So for example, you know, let's just say prices broke above this 200 level, and we see, you know, 2 attempts down that fails, then that might be a good long opportunity to reach this measure move target, because now we saw two attempts down that failed while this measure move still can come into play. So that would be a good long opportunity or a trade. Not just based on, oh, I think it's going to go higher, so I'm going to go ahead and take a long. You wait on, you know, potential setup. So let's just say for shorts, let's say we get rejected from here. Traders are like, okay, we get rejected from here, see aggressive selling. I think that'll probably be a good short opportunity, because now prices try to go up once, twice. This level is holding really nicely, and we see aggressive selling. Okay, you know, we're probably going to go down lower. So that's how traders are looking at the market. Now, I'm just showing you guys what can potentially occur based on the chart, which is the upward trajectory versus the downward trajectory. So that's all I have for Tesla this week, and I'll see you guys, give you guys an update next week, Monday. This is Vee Trades, and thank you for your time. The Vee Trades technical analysis course is now live. Learn to read the chart the right way to prevent costly mistakes. Click the link below to start training now.